Hey, what's up, my friend? So welcome back to this month's market analysis. I know there's a lot of things going on in your mind right now, right? Oil collapsed to $30, the stock market's not doing too well either, forex market's going crazy with all the sudden spikes up and down. What is going on, Rayner? Don't worry, we'll break it all of this down step by step in this month's market analysis. To kick things off, right, let's talk about the forex markets first. If you look at not most, right, but a few of these currency pairs like, Aussie Swiss franc, New Zealand Swiss franc, Aussie yen, Euro Aussie, you'll notice that there is a lot of crazy spikes up and down on your chart, and this might be very foreign to you, especially if you are someone who started trading 6 months ago, 1 year ago. You're wondering, hey, why are this, spikes so crazy? And that's usually because of a fundamental piece of news in the market. So I remember back in 2016 when the President Trump got elected, this spike is also apparent on the S&P 500. It spiked down lower followed by a reversal, and then it had a massive uptrend. So this is usually caused by a huge piece of fundamental news out there, and this one is possibly due to the Saudi Arabia, the oil issue. So as traders, how do you, trade in such market condition? Okay, so usually when you have this type of crazy spike, okay, so let's have a look at Aussie Swiss franc, the one that I want to talk about. When you have this type of when you have this type of crazy spike, it can be difficult to trade it because the price seems to be in no man's land, right? If you look at this where the price is right now, the price is just in the middle of nowhere over here. The nearest low is over here, and the nearest market structure is possibly over here and over here. So at this point, there's really nothing much to do except to wait. Unless you're a short-term trader where you can trade the lower time frame market structure. Otherwise, if you're trading off the daily time frame, the 4-hour, 8-hour time frame, there's really nothing much to do, right? Because the price is in the middle of nowhere. So usually my suggestion is that if the market makes a crazy move, a huge spike up or down, and you do not know what's going on, let the dust settle first. You want to have your levels ready and look to trade, right, when the market approaches the level that you're looking at. In other words, let the market come to you, right? You don't have to do anything, even though it seems that there's a lot of opportunities out there. So how would I trade this? So from the looks of things, I can see that Aussie Swiss franc, clearly this market is still in a downtrend. Okay, series of lower highs and lower lows. Okay, just plot out series of lower highs and lower lows, which clearly you can see this. The next question now is that since the market is in a downtrend, where is the nearest area of value? Well, there are multiple areas of value on this chart. You can see that there's one over here where previous support could become resistance. Then there's another area of resistance over here. Then you have this downward trend line over here. We have multiple areas of value. And here's the thing. If you're going to wait for the absolute best level, like let's say this one over here or maybe this one over here, then chances are, you'll be sitting on the sidelines forever waiting for a trading opportunity. So this is where you got to be versatile, flexible to identify the nearest area of value, right? And look to trade it when an opportunity arises. So what I'm seeing besides this 3 area of value is that there's also another possible area of value defined by the 20 period moving average. I notice this market tends to respect the 20 MA, had a bounce once, twice. This one almost 3 times, and it could come back for a 4th time over here, somewhere about here. So I will be looking for shorting opportunities somewhere around the 62.5 cent area. So if you just imagine this, if the market were to rally higher, I could actually draw out another level based on this swing low over here. Okay, so let's go down to the 4-hour time frame and you see what I mean. So on the 4-hour time frame, you can see clearer. This would be now a possible level to look for selling opportunity, right? This previous swing low that could become resistance around the 62.5 cents level. And if you look at the daily time frame, you'll notice that the 20 MA, okay, it's still heading down lower. So maybe over the next few days as the price rallies higher, this 20 MA will slowly inch down, and this could now become an area of value as well, not just at the 20 MA, but also at this previous swing low that could act as resistance. And the way I'm going to trade this is to time my entry on the 4-hour time frame. So if you go down to the 4-hour time frame, what I'm looking for, okay, is just a very simple price rejection for the price to come up, break out, and then do a false breakout, and then reverse closing back within this this range, right, where this previous swing low could become resistance. This is what I'm looking for. Then stop loss can just be 1 ATR above this highs. Possible targets, right, will be at this swing low and this level over here. These are 2 possible targets for this instance. And this is how I would trade, right, crazy spikes in the market, by letting the price come to me, letting it come to the area of value where I can, manage my risk. and have proper position size. Okay, so this is for Aussie's Restraint. Moving on, what about oil, right? We saw a crazy huge move on oil. Okay, oil, we have Brent crude oil, we have the WTI, the Western Texas. So let me just look at the Western Texas one. Okay, and you can see that this market oil, it just went berserk, right? Dropping like 30+% over the weekend. So let's look at the historical price action to guide, right, potential scenarios that could occur in the near future. So if you look back at oil, okay, I'm just going to look back as far as possible. You'll notice that this level, this $25 or $26, right, the red color line that I have on my chart is a area of support being tested a number of times, right? This one is back in like 2003. This one's almost there. This one is a 2008-2009 financial crisis. Then we have one more in the 2016 oil collapse. Over here, it tested around the $26, $27 region, and now we're almost back here again. So this is definitely a key level. But the thing that I want to point out is that oil, it has although the sample size is small, but at least it gives us a clue, a possible scenario to how oil could behave. It tends to try to retest that level multiple times before it staged a rally. So you can see over here, back in 2003, came all the way down, did a slight brief retest before it rallied. Then came back for almost another test before it rallied once again. Then you move forward in time. You see back over here, okay, in 2008, 2009, it came back to this area once again. This area of support tested once, bounced, tested twice, bounced, tested thrice before it rally off again. Then you look at it back in 2016 over here. Price came into that area of support that we have highlighted around the $25, $26 price point here. Bounce, retrace for a second test, and then it rally. And right now, the price is back at this area once again. It has the bounce. He had the first bounce already. So at this point, right, if you miss the move, don't worry, because my guess, I could be wrong. I'm wrong many times, but my guess is that we could see a retest of this area once again. A retest. And when the price retests and gives you a false break, right, that's where you want to be buying. Okay, you don't want to follow the herd, right? The news, the media, they're all bearish on oil. Oil is going to collapse. Blah, blah, blah. It's the end of oil. That's where you want to take the opposite direction, right? And you don't just want to take the opposite direction or be a contrarian for the sake of being a contrarian. You want to look at historical price action. You want to look at possible entry points, level that you can manage your risk, and then you take a position. Risk management comes first. Okay? You're not being a contrarian for the sake of being a contrarian. You have a sound methodology. You have clearly defined your risk. Only then you take the trade. So my game plan for this, actually I have two game plan for oil, right? Let me talk about the first one from a trading standpoint. Is for oil to come back down, give you a false break, you retest this lows, then it close back strongly back above this swing low. Stop loss again can just be 1 ATR below this low, somewhere here. So at this point, you have a pretty nice sweet entry, and if this is the bottom of oil, this is pretty much one of the lowest price you're going to get. And how you're going to manage your trade, honestly, right, I can say, use a trailing stop loss, ride the next wave up higher, but sounds easy, but when you do it in practice, right, you have all this fear coming in, right? Oh, oil up 10%, let me take profits and stuff like that. So whatever the case here, right, however you decide to manage your trade or to exit your winning trade, have a plan for it and be consistent with it. One approach you can use, right, is to have a possible target profit, maybe to take profit at around this $42 price point. Or if you don't want, you can also trail your stop loss. Let's say, using a trailing stop loss like the average true range indicator, the Chandelier K stop. Or you can use moving average to trail your stop loss. There are many ways to go about it. So again, there's no one size fits all. Whenever you enter, whenever you set your stop loss, right, always have a predefined plan to exit your trade. Or maybe some of you might want to take half position size off at this level and ride the remaining half to see how far oil can go. That's possible as well. All I can share with you is the area of value that you want to be trading from, and if that happens, right, you want to look for buying opportunities at that area. Okay, so that's the first game plan for oil. From a trading standpoint, looking for a false break at around the $25 area. The second game plan I have for oil is, and this is coming from a investing standpoint, this is a trade or a bet, right, that I would possibly hold for a few years. This plan is that I'm looking to buy oil around, $27 to $30 price range. I'm just going to buy, okay, without much leverage, and I'm going to hold it. And the reason for buying and holding it is very simple. Ask myself this question: will oil still be used within the next 5 years? And my answer to that question is yes. Clearly, oil will still be used within the next 5 years. It's one of the important commodity, right, that runs this entire world. And right now, oil is trading, let's say, around the $30 price point, the $27 to $30 price point. Is oil, right, likely to remain at these low prices for the next 5 years? And my answer to that is unlikely. Yes, that could be possible, but unlikely. I rule it as a higher than 50% chance, right, that oil, right, will be higher than $30, right, over the next 5 years. And with that simple questions, right, two simple questions that I've asked myself, right, I want to be a buyer of oil. And since I'm holding this for the long term, I cannot use excessive leverage on this. I cannot, trade on, let's say, a 5% margin or a 10% margin. No, right? When I do this, right, the maximum leverage I'll use is probably just a 1 to 2 leverage. Maybe I put in like, $25,000 and I can control $50,000 worth of oil. Okay, you don't want to use this excessive leverage if you are thinking about investing, right, in oil over the next few years. Because, any sudden pullback or spike, right, you could possibly lose all your capital and more, right? So a disclaimer down here, right? This is not a recommendation for you to buy. I'm just sharing with you my two thought process, one from a trading standpoint and one from an investing standpoint on how I'm looking at oil right now. And if I'm investing oil, right, possible targets I want to look at is a few levels. I noticed that if you look at the weekly time frame, oil has been within this range for quite a long time, right? So the first target is around $60 and the second one is about $75. So these are the two possible targets that I will look at if I were to sell this so-called oil investment of mine. And you can see that my entry price will be somewhere about here, right, around this area of support. Okay, so hopefully that makes sense to you, right? That's just my thought process, not a buy or sell recommendation. If you make money, if you lose money, it's not my problem, right? This is just for educational purposes only. So please do your own due diligence. And moving on, right, I also want to talk about bonds. Okay, so bond is on a tear lately as well, right? Because of all this uncertainty in the market, right? It's a safe haven. Bonds just exploded up higher. So clearly at this point, right, it has already made a huge move. And if you want to be buying right now, I would say it's too late. If you look at it, bonds right now, if you want to buy at this price, where are you going to set your stop loss? So this is a concept that I've nailed home many, many times. At this point, right, if you want to be buying here, there's no logical place for you to set your stop loss. If you look at it, right, nearest market structure is possibly at this previous resistance that could become support. And if you really want to identify the nearest area of value, it's possibly at this 20 period moving average, which is also quite a distance away over here. So at this point, my suggestion is, again, let the market come to you. After the market makes a huge explosive move, it needs to digest the recent move. It needs to consolidate. It needs to take a breather. So look for trading opportunities at this 20 period moving average. Okay, you can look for something as simple as a simple price rejection when the market hits down lower, gets rejected and close back above the 20 MA. That is a simple entry technique that you can use to get long. Alternatively, you can go down to a lower time frame like the 4-hour time frame. Okay, and you look for a break of structure. So let's say the 20 MA is about here on the daily time frame. The price could come down lower, and when it makes a series of higher high and higher low and higher high, this is where you can look to get long. Stop loss again, just 1 ATR below this lows. And at this point, right, you also have the confluence of the 20 period moving average that you have seen earlier on the daily time frame. Okay, so this is my game plan for bonds. Okay, so that's pretty much it, right? So this is what's going on in the markets right now, how I'm looking to trade it. Now, if you've enjoyed the market analysis, right, then I want to welcome you to join Pro Trader Sage, right? This is my premium membership, right, where you will get such market analysis every single week, right? I usually publish this type of videos on a weekend to share with you my insights of the market, the trading opportunities I'm looking at, the trades I took, and much more. So that's not all, right? Because as a Pro Trader Sage member, you get many benefits that come along with it. So for example, you have access to the backtest research lab. So this is a lab, right, where I pretty much backtest the financial markets to tell you what works and what don't in the financial markets. So we have different stuff going on. We have things that talk about stock markets, quantitative trading, and much more. So all this over here in the backtest research lab, and I regularly add in new lessons, new findings that I have in the financial markets. Then also we have the weekly trade alerts. This is basically, right, the video that you have seen earlier, but it's on a weekly basis. So every single week I publish such videos, right? So you can see my analysis, my thought process, the trades I took, and you can shorten your learning curve and quickly level up your trading. So you can see that every week we publish a new video on the markets. We have a premium trading strategy guides. This is for you, right? Especially if you enjoy reading my blog posts and you want a PDF version of it. So every month we upload new PDF trading strategy guides. It's free for you to download. You can just click on it, right, and you will be brought to a PDF link, a PDF page to download it. We have a exclusive training webinars for you to help you level up your trading, learn new trading strategies and techniques. Okay, these are exclusive webinars that you will not find elsewhere. Then we have trading books and investing books that I recommend. Trading checklist, right? So before you put on a trade, you can download this checklist to review it, right, to make sure that you're on the right side, on the right page, right, and not doing anything funny or silly, right? We have the proprietary trading indicators vault. This is for MT4 users. You can download all these indicators to help you with your own trading, like the MACD, MT4. There's some issue with it. We have fixed it over here. We have the Donchen channel, news reporter that alerts to you potential important news that's coming up, and much more. It's all over here in the indicator vault. And also we have the simple mean reversion trading strategy that you'll learn, right, to trade the market. So this is a very simple strategy for you to get started, especially if you do not know which strategy to go with. Start with this simple mean reversion trading strategy because it is back tested, right, to identify first and foremost which markets tend to mean revert, which markets have a mean reverting characteristics, right? Then I explained to you, right, the setup to trade this type of mean reverting markets, right? So you really have the odds in your favor, right? Applying the right trading setup in the right type of market condition. Okay, so this is a mean reverting trading strategy that anyone can learn, right, even if you have no trading experience. So this is what you'll get, right, as a Pro Traders Edge member, right? New content are updated regularly for the Backtest Research Lab, weekly trade alerts, premium strategy guides, and much more, right? So I'll put the link below so you can check out Pro Traders Edge. And with that said, right, I hope you've enjoyed this video, and I'll talk to you soon.